Hey everybody, welcome back. Wild day to say the least. You can see the movement here in the futures. We're going to cover what caused the sell-off and what caused the rally and what's likely to fuel it tomorrow and going into the weekend or make it drop. We have a lot to cover, so let's get into it. If we just mark off today, just the futures alone, you can see the range here from having this little doji that we cracked to breaking through down to the actual rally up. Take a look at this and we're going to get into some pretty specific details and line by line on what exactly is going on out there. And I think it's pretty important when you see it this way. So if you just take a look, and we'll just start with the ES here, and what we're going to do is just mark off a couple key levels, the midnight level for a second, just so we can see where that is. And then you can start seeing right around that 4 o'clock level, right around where Asia gets involved. This is going to seem pretty simple in a second as to why we're looking at these very specific levels. And then the 7 o'clock when retail starts paying attention via whether it's Twitter or whether it's Thinkorswim, whatever. So they start kicking in around 7 on their trading platforms. And now we can see this big bar right here. Now we all know what that bar is. That bar is CPI. And what we always do is we always mark off the 1 minute bar because we want to know exactly what's going on there. Why? Because this is where the algorithms move on any major data. You'll see it again tomorrow with PPI. Once we have that established, we have a range. And I just think it's important to note that that wiped out every single range of any place where these guys would have entered. And the important part about that is once you crack a level like that and there's nothing behind it, you're done. You're going to wind up going lower because the support that was here is just gone. If you go back and just historically mark these bars and how you act at these specific levels, it becomes, as someone likes to say, absolutely glaring. Now, if we take a look here, we watch the break and then 9:30 kicks in. And it's not too hard to see where 9:30 is. So if we do ourselves a favor just to mark it off and drop a level there, you can see the crack. See the crack right at the top of what? Right at the top of this level. So it was very clear from then for those people that like your zero dated options, whatever, crazy things you kids are doing these days, right there. I mean, it's pretty obvious. There's your bar. You have a clear rejection. Trades on. There's your stop. And then you're coming down here and you're testing. Test, can't hold, retest right there, and you'll see that retest. I kind of like doing the retest more. Test, retest, and then that's it, and then it was straight down. Now, whether or not you got involved there or you didn't get involved there, you can watch the day unfold. Pretty realistically, you can see exactly what starts to happen. First, you get that 11:30 bump. Why do you get that 11:30 bump? Because you have an auction there, right? So once you get that bump on that auction, despite the news that we're going to go over too, on that bond auction, then you get that 1 o'clock bump, and you can see that 1 o'clock bump right there as well. What happened at 1 o'clock? 10-year bond auction. You can see these turns in the market where they're watching the bond market go, and then from there it was on. You never looked back once they saw that bond auction, and look at where you fought again. Right here, up, tries to break, retest. So it's always these retests that you want to watch, right? And when you look at it this way with nothing more on the screen, it gets very clear. What we did today was the exact opposite on this with a Q chart. And what we did was we shorted the NASDAQ right into this. It was pretty clear what was going to happen to us. I thought it was. I mean, I thought it was, again, as someone likes to say, absolutely glaring. See, when you know when to look for, it's not really a big shock when this happens. Like you can just know that this is the area that you're going to watch. And again, it doesn't mean always that you're going to be right? It doesn't mean that. You see that 9:30 level? Come here, we're going to just do it on the Qs to make it simple. And now watch that 8:30 bar. And all you're doing there is you're just watching the levels. Look at that level right there. And then you're watching there. It's a Christmas miracle. And then what happens? As soon as it broke there, that was it. Boom. You always mark these levels. Not sometimes. You don't think about it. If you take nothing else from this video tonight, you will take this home with you. You will go to sleep and you will think about it. Go, my gosh, I never knew it was that easy. It's not easy. But it's pretty simple to just mark off that level and go from there. Here, take a look at this trade. This is setting up pretty nasty stuff. It might make sense to sell the NASDAQ. That's what I'm going to do. I'm going to sell the NASDAQ here, right on that bounce. So I shorted there. We'll find out in a minute if I'm right or not. Clearly, we have an issue, and we can see that issue here. All we're doing here is constantly pulling money out left and right, and we're just watching for now. This could absolutely reverse. I will say this thing's definitely moving down to the downside. Trimmed more of my NASDAQ short. I have a bunch of it, guys. I'm just trimming into it. I don't know that this is going to hold. They are trying desperately there. So into that's where I'm actually trimming. That's actually the area where I'm just hitting it over and over again and trimming it every time it does it. But you've bounced off it, what, 6, 7 times. It's very difficult for me to believe that you're just going to miraculously just hold here. I just don't believe it. Right into that, I'm going to trim some. There it is. Told you we weren't going to stay there. There's no way we were just going to stay in one spot. They're going to take everything down. And into that, I trimmed more of the NASDAQ short, and now the rest of it I put at break even. So right into that, we trimmed a lot. Now that that's broken, that becomes the stop. And I trim, like I'm doing right now as we're talking, into this. I'm actually trimming. And what that does is it just allows me to let this work out. So I'm about half out of the short now. So what I'm doing there as I'm trading, I live trade in the room, and then what I'm doing is just explaining it to them as the trade's progressing. So we're watching the trade progress and we're just doing it. Some people do futures, some people do the zero dated options, or I just short TQQ most of the time. Just because it's easier and it's way more in my favor than anything else in my opinion. But I do also do futures and I will do the zero dated options. But I do like just doing TQQ because it'll exacerbate the move and also the expense ratio is going in my favor. But nevertheless, you see this, you can start seeing your bottom, you can start seeing the bounces again. If we take a look at these bounces, we're not really surprised. You bounced in the same exact levels, and you can see the same exact areas. Like, it's not rocket science, guys. You broke out of the 10-year when the 10-year bond auction goes today, and it just happens to be the same exact level that was marking these highs. So once you start understanding where to look, you can start overlaying things with it, right? Like one of the things that we always watch is we just want to watch the 10-year, and you'll watch the 10-year at those areas, and you'll see movement. It's not too hard to see that there's something going on at the 10-year when that happens. You can see the bond buying yields are going to drop, right, which means they're buying bonds. And you can start to see this start to play itself out. Obviously, you can see how this played into the end of the day as well. This is exactly what you're looking for. You're looking for that edge, and you're looking for what they're doing. Now, there's a couple other reasons, in my opinion, why the market's doing what it's doing, specifically tech ahead of PPI, and we're going to get into that. But let's get to the news and what actually moved the market, because I do think that this is important for us to get just how goofy this was. So most important is just to focus on the key data, right? So here we are. We're going to go 0.2, 0.2, 3.2, 3.2. So core month over month and year over year came in line. So without food and energy, the things that we need to live, we were in line. Okay. Inflation month over month, in line versus previous. Okay. Miraculously, somehow, if someone can explain this to me, that'd be fantastic. 2.6 versus 2.9, 2.5. So last time was 2.9. We came in at 2.6. Or the estimate was 2.6, we came in at 2.5, which is the worst number that we've had, or the lowest number that we've had since March 2021. Now, if I am to speculate, which I like to do, what specifically would have moved us? Well, I think the month over month coming in line, I think that helped us a little bit today. Because it came in and saying, okay, we know what's going on, and you see where we were before, and then we had this huge drop, and this scared everybody. And what they like to do, or what J-Powell likes to do, is he likes to take 3 months and average them together. So he would take January, February, March and average them together. Then he would take April, May, June, and that's going to freak him out because of the variations of it versus this quarter. Now, if you're coming into this and you're more even keeled, well, that's really good for us, right? Now, let me explain why that's good for us, because if that which gets measured gets results. So if we know for a fact that he's doing what he's supposed to be doing and it's more manageable, that's great. Here's where I think the larger issue is. 3.5, 3.4, 3.3, 3, 2.9, 2.5. This is year over year. And you can have this, you can even have this, but this is not great. And people are like, oh, we're dropping. I get the excitement in the drop. I think it's great. It's very, very good for interest rate sensitive trades, as you can see from the market today. The larger problem with this, from my opinion, is 2.9 to 2.5 is one of the single greatest drops that you've had, period, in looking at the past 12 months. It's a big drop fast. That's what scared the market to begin with at the beginning of the day. It was not orderly. For example, you're seeing drops of 2-3%. That's not what this is. This is a 40 basis point drop. It's a very big drop if you start looking at the difference between these numbers. You don't see anything like that. You had something here, and this is when they thought that they might start actually not having to do what? If you remember back in November, he's like, oh, we're done raising rates, right? And that's because he saw this drop. We don't have to raise rates anymore. And then you kind of even keeled out. And then they were saying, oh, we're going to have to raise again. And now it's like, well, what are we going to have to do? And now we have to see how it plays out. This drop scared people. And that's why we did what we did off the open. Now, as always, it's not what we get, it's what they do with what we get. So here we have the 17-week T-bill auction, and that was 481 previous, 474. And the 10-year went from 396 to 364. So all of a sudden, between T-note auctions or 10-year auctions, you have 30 basis points. That's a 10% differential. That is a huge differential. It's probably the single greatest differential we may have had in a long time. I'd have to go back and take a look at it. But to see 10 basis points like that, or 30 basis points or 10%, it's a big deal. And this is what drove us. Now on the tech front, NVIDIA had a big move today and it moved semis. There's a lot of reasons for this, and we're just going to go this way with it because it's easier. NVIDIA presented at a conference that none of us are really invited to, Communicopia and Technology Conference, and they presented today. He's been doing one-on-ones all week at this conference. One-on-ones are where high net worth individuals, ultra high net worth individuals, or primarily large institutions that have huge positions will meet with him. And you've been seeing the stock actually start to base sideways here. We'll talk about that in a second. This is pretty interesting where you're seeing people like Semaphore and all these people saying U.S. closer to greenlighting NVIDIA chips to Saudi Arabia. That's actually going to be a big driver because there's a lot of contention about where these chips are going to go, where they're not going to go. We'll figure that part of it out as well. NVIDIA CEO admits it's tense, surging demand for Blackwell. So at this conference and on the one-on-ones, he's been talking about how demand for Blackwell is just absolutely through the roof. Very different statement than the tepid statement that he had during earnings. I don't know really what was going on with him that evening, but it didn't go very well during the conference call. And then, of course, they're also saying that they're trying to link it somehow to Kamala Harris. I'm not entirely sure how they're going to do that, but whatever. But what's important about this is it's in the news. We'll see what's happening. You had a really good day today, and there's a couple things about this that we should pay attention to. That is really big volume for where we've been, and I think that that's one of the things that you should focus on today with this. So this was something that we were traded in the room a lot today. Pretty active with it, but if we take a look right here, you can just see it's pretty obvious. I mean, it's most volume you've had in the month, and it's out of the rip on that. Now, you're not out of the woods, but one of the things that we tend to focus on is when we look at these names, I look at the 3, the 5, and the 8 a lot. We actually went through this, I think, in the pre-market, how this was getting above here. And then, again, hindsight's a beautiful thing, but when you're here on like the 9th and the 10th, and this is what you're dealing with, it's always nice to go back and look at it and go, okay, well, this is what you had. Right, so you always want to do that. That's why I like this system. It's so easy to go back and just take a snapshot and go, okay, well, this is what we had, right? So when you're seeing this, okay, this is why it's so important because you're going, okay, well, we're here, and then what did we do? And this is exactly what we did. All we did was come down here and gap fill, but there were some really easy trades there. To me today, quite frankly, and we did a bunch of them. I'm not going to bore you with them and bore you with another trade, but we went long this a lot. I mean, I did. It was pretty obvious what was going on there, and you could see that. Look at the gap fill. And I think some people waited for the gap fill. Other people did it later in the day. But there were so many different breakouts here. But watch this just play out and build. Do you come back, you gap fill, you have a 3-5 cross right here, and now here's your 8. So now you start having that trajectory of the green crossing the yellow, right? So they all have to stack. For those that know this chart that I use, they all have to stack, and once they stack, you're more interested in buying the dips. See, if you're buying the dips when it's not stacked against you, can it work? Yeah, it can, because you can catch something like this or these dips, right? Sure, of course it can work. Where are the dips better and easier? When you're stacked. Right on top means stop, right? I'm not the brightest bulb, so when I do it like that, it's just easier. So when we're seeing here, you come back down 3-5 cross, comes back, gap fills, starts to push, and then you go from there. And I think that's really important for us to take a look at, for us to understand. And then you get to this level, that 16 level right here on top of the gap. And that's roughly what you're battling right now, that area. Really hard to imagine that you're just going to stop in that area and you're not going to completely gap fill. But maybe PPI's got people on their heels tonight. We'll see how it plays out and go from there. But that is a very different looking chart for the first time. And if you take a look at the difference between that chart now and where we were, and I can't stress this enough, guys, this is why I try to make you almost like choke on the stool, because this is the kind of stuff that you have to focus on. When green's on the bottom and it flips to yellow and then green's going to cross red, you're setting up for these to all line perfectly, right? And that's what you're looking for. You're looking for these turns, changing trend. Why? Because let's just play devil's advocate and say, and at the time recording this, I am long and I have calls. But let's just play devil's advocate and say, all right, well, it does this, and then starts doing this. Well, you might be more comfortable playing it now knowing the 3, the 5, and the 8 are here. You also might not, but I would be more comfortable playing that on dips now versus playing it on dips here. You might think that's weird, but now I know that I have some level of support, And that's appealing to me to know that I've got some level of support. Now, also what you do here is you just overlay these and say, okay, well, here's the SHOCKS. Well, SHOCKS flipped here, and then we did this for 2 weeks, and then we broke right in here, and you can see that order. And does it always work? No, but with sectors, it does stay more than not. And that's really important because it takes longer to turn a sector, right? So when you see these sectors turn, you can start looking at them and going, oh, okay, well, we're getting in position. So on dips, I might want to look at doing, semis again, because even if I dip here, the 3 is still going to push up. The 5 is still going to push up. As long as I'm above that 8, all these moving averages are still going to push up. So any dip becomes more of a buying opportunity. So what I like to do is just know where those levels are. For example, something like that would be pretty interesting if PPI comes out and it's a disaster tomorrow, and take a look at it and go from there. This is the kind of thing that you can do over and over and over again. And then if you're on the short side and you're like, well, here's the 8, we keep breaking over it, we're not doing great, so we're just going to stay out of the way. There's a method to this, and it does work as far as putting you on the right side. And what you're trying to do is just stack as many things in your favor as possible. If you look at the Qs right now, it's another Christmas miracle where you're looking at this and going, okay, here's the 3, the 5, and the 8. They all cross here. And I was a genius here. All my longs worked. Then I wasn't so smart over here. I wonder what happened, right? Let's clean off all my nonsense, and you can see it. So when they start turning again, you just realize that as long as you're above 460 on the Qs, you're not in the worst position in the world, okay? This is very simple to do, okay? And this is just a 3, a 5, and an 8 color-coded. They are daily moving averages put on a 15-minute chart, okay? That's all they are. 3, 5, and 8 daily moving averages put on a 15-minute chart so I can watch the movement of them. And it just trades like ribbons. You could actually even turn it into a cloud if you were so inclined, and then you would just get the cloud flips. It's very similar to another private cloud thing that I have. But anybody can create this, and it does keep you in and out of harm's way if you look at it. For example, if you just looked at it from here and I show this sometimes and I think it's helpful. If I just got rid of all the data and just said, well, when would you buy and when would you sell? And you'd be like, okay, well, I'd sell here, I'd buy, here when they all aligned. And now just go put this back on for a second. I'm just giving you an example, devil's advocate, right? Okay, so I would have sold that drop. I wouldn't have thought about buying it, right? And I would have bought that breakout. I mean, both of those worked, right? Even though you're in the wrong position, they both still work. And I think that's an important distinction to look at because you're not looking at just pulling out a couple dollars. You're trying to catch more of a swing trade. That's a 15-minute chart. It's going to be more of a swing trade chart and give you more of like a medium-term to short-term outlook on how you should look at things. You might want to remember this. It's extremely helpful, especially in areas like this. As far as other names, what I think is best is just to go through the themes. So for example, we take a look at XLRE. Let's just take this off and see how this is going. And let's make this a bear chart again. And all we did was break down and then rally back up, right? Not really the end of the world, was it? And then you're starting to see these move again. And it's the same usual suspects. It's nothing new, guys. Another high, another higher high. DLR breaking out, another higher high. It's probably one of the easiest trades today. EQIX, higher high breaking out. Data centers, we're going to the pick axis. I don't know if you guys noticed that yet. We're going to the pick axis, you're going to the axis, you're going to anything that goes and mines the gold. Okay, the gold being AI. You need land. You got to buy land, right? That's a data center. Think about it that way. It starts making a heck of a lot more sense. And that's how, pardon my voice, that's how I would suggest that you think about it. That said, going forward, I'm not saying to not buy the NVIDIAs of the world or somehow AMD is going to benefit from all of this if someone can explain that to me. But you just want to note how things are moving. You're going in the PPI tomorrow, so you're going to want to pay attention to that. I would suggest you watch the usual suspects again. Watch the 10-year, see how that's going to go. Watch where the money flow is going. Look at XLK today. Okay, you can see this super easy. Here's XLP. That's not going too well, right? So what are they doing? They're rotating. Okay. The other thing that they're rotating on, in my opinion, is this US dollar Japanese yen trade. And I've been hammering this home left and right, probably to the point where people are sick of hearing about it, but you're going to hear it one more time. If this rallies, the NASDAQ will rally. Why? Okay. You have short the yen. When they short the yen, they buy the dollar. Okay. Short yen, buy the dollar, buy tech companies, US tech companies, and buy bonds. When the yen raises rates, the spread between this trade gets tighter. If this is 4-to-1 or 8-to-1 margin, you're going to have to cut your margin requirements because the profitability goes away, which means you have to do what? Sell your tech stocks. If you overlay this very clearly with right here, right? And then just stay with me. Don't go to the light and watch the Qs. All right. If you look at the Qs overlaying with this, let's go to this and we'll make this a line 2. All right, great. We're going to drop this to a 1. We're going to have to reimburse them just solely because of how this is going, because of the time difference. But if you take a look right here, 4 o'clock, and then you just see the next day, down, up, and then what's happening the entire time that trade is going up, the US dollar, the NASDAQ is going higher. If we look at this on a daily chart, it is literally like looking in a mirror. So the question becomes what's going to happen next with it. I would watch this very closely. If you take a look at this over a longer period of time, you can just see the pattern of behavior. I don't need this to rally. I need it to stop going down. That's what I need, because that means they're leaving the trade on and they're not deleveraging. It's that deleverage that's adding more pressure to the NASDAQ. That's it.